brutal month for Bitcoin, the digital asset plunging more than 30% from the all-time high it hit just last month. What triggered the nosedive and when will it stop? Barron's associate editor Andrew Barry joins the panel. Andrew, we all know Bitcoin is an incredibly volatile asset, but volatility is a lot more fun on the way up. What's causing it to plummet right now?
Well, I mean, Bitcoin's now around 85,000. It was around 125,000 last month, and that spilled over and hurt a lot of some of the crypto-related stocks like MicroStrategy and Coinbase. What's behind it? I think the stock market weakness has something to do with it because of the correlation between equities and Bitcoin. You've also had some liquidation of leveraged holdings in Bitcoin by individuals. Plus, you've had some outflows from some of the ETFs, particularly the IBIT, which is the biggest Bitcoin ETF.
Yeah, one of the things that JP Morgan pointed out is that in the drop in stock and Bitcoin, retail investors were buying the dip in stocks, but they weren't buying the dip in Bitcoin. And I think that's pretty telling, that it's just not considered this asset that you know is going to go right back up when it has these big declines. And you also look at it, and it's not trading like big tech, it's not trading like NASDAQ, it trades like small cap tech stocks. And those are very risky. It's probably something to do with the fact that cryptos are backed by venture capital. That's a lot of the small cap tech. But it's just a weird thing that these are the riskiest kind of stocks out there in the tech world, and Bitcoin is following them.
It's also interesting because Bitcoin bears say one of the problems with it is it has no earnings, no intrinsic value. A lot of those small cap tech stocks have no earnings. Andrew, what's the bull case for crypto?
Well, the bull case is that it's a legitimate asset class that's going to have an important role in the global financial system, and that you're going to see growing investor interest and demand, and that's going to drive the price higher. Most individuals own little or no Bitcoin, so that's part of the bull case. Also, there's a limited supply of it.
Go ahead. Near term, how much downside risk?
Well, our technical analyst at Barron's, Doug Bush, was actually bearish on Bitcoin around 100,000. He thought it was going to 85. He thinks it could go to 70,000. The bear case on Bitcoin is it's just a ledger and a blockchain. There's nothing really there. Warren Buffett and Charlie Munger of Berkshire Hathaway have been consistently bearish on it. Munger's case was consistently bearish on it.
Well, it's interesting. You talk about how individuals don't really own it. PayPal's running a promotion right now where if you buy crypto through them, you could win up to $100,000. And I said I wasn't interested, and then they sent me another push notification today reminding me I can still do it. So definitely maybe there is some more individual interest out there.
Who doesn't want free Bitcoin?
Me, apparently.
I would never bet against Buffett and the late Charlie Munger, but it's true that is the wrong generation for Bitcoin. Right. A lot of young people like it, and now endowments are creeping in as well. But you wrote an interesting analysis, Andrew, of a company that used to be a software company, but now really it's just a leveraged bet on Bitcoin. Explain that and your investment thesis.
Well, the company is Strategy. It used to be called MicroStrategy. It's Michael Saylor's company, and it's got about a $50 billion market value. It owns about 3% of the world's Bitcoin, which is worth about $55 billion. There's common stock. They have some bonds. They also have about $8 billion of preferred stock outstanding, which are interesting plays on Bitcoin because those preferreds yield between 10 and 15% right now. That's compared to about 6% on most bank preferreds.
And zero for Bitcoin. How do they actually make those dividend payments?
Well, that's part of the controversy about these preferreds. They don't really have any income to make the preferred dividend payments. They're basically selling stock and new preferred to pay the dividends. That's created a lot of controversy. Some people call it a pyramid scheme. The company's retort, and we took a more upbeat view on the preferred in Barron's, is that they could potentially sell if they needed a small portion of their Bitcoin holdings to make the preferred dividend payments. So, it's kind of a quasi-asset-backed security.
And so I know that Bitcoin often gets called digital gold, but is it really? Which do you prefer?
Well, I'm kind of old school. I like the real thing, gold, and that's my preference, even though younger people tend to prefer Bitcoin.
So, Andrew, if you were forced to choose to either own Bitcoin or to own these preferreds on Strategy, which would you choose?
I actually like the Strategy preferreds. You get a nice yield, which admittedly is not super secure, and you have some Bitcoin exposure.
All righty. With that, thanks, Andrew. It's going to be fascinating to see where this Bitcoin trade goes, up or down.